You a marathon fan? Marathon running fan.
Marathon running?
Not marathon, the dim sim factory company.
What do you... Oh, I didn't even think about that. I was trying to think about what you meant by marathon because I thought it would be very obvious to you that I would not be into any form of running. So surely you couldn't be asking me about the marathon running. Do you mean am I a fan of Marathon, the place in Greece?
No. Did you see what happened in the marathon a couple of weeks ago?
No.
There was
someone ran it very fast with special shoes, right?
Yeah,
Is that right?
London, probably London, New York, Boston.
I find this ridiculous, all
Berlin.
this special shoe stuff.
Yeah, well, we talk about that's why everyone should be wearing barefoot. There'd be no cheating, but
yeah. Well, none of these special shoes of any kind have got any clinical evidence that they reduce injury. Zero.
No, they make you go faster.
Yes, that's right.
Much faster.
But all of these very comfortable shoes.
Adidas didn't have carbon. Adidas had this special foam, but
but that is for like elite runners.
Yes.
But for these shoes that people like me wear to walk around and people wear to run, like Vomero Plus Nikes and all these very soft midsole shoes. So they feel great, but there is literally no clinical evidence for them reducing injury.
It was pretty amazing though. So Kenya's Sebastian Saw did the first ever sub 2 hour marathon. So the 2 hour marathon's been this elite. Remember the 4 minute mile or the 9.7 second.
I remember
100.
when you could win a marathon at 2:15.
That was not that long ago.
Yeah.
Regularly, you still can win a marathon at that time. This is great conditions, it was cool.
Yeah.
But 2 hours was considered this unbreakable. So Kipchoge, who was the great runner at the previous generation, as in retired a couple of years ago, I think he's Kenyan, Kipchoge. He ran a sub 2 hour with like 30 different paces, and it was like a special course.
People run with him and in front of him to change the wind dynamics.
He had the right sort of wind thing, people running a certain formation. He did like a 1:59 something.
Yeah.
Sebastian, so with none of that, did a 1:59.30. What's even more remarkable is Ethiopia's Yomif Kejelka, who had never run a marathon before, never run a competition marathon before, also broke 2 hours. So imagine no one's ever broken 2 hours in the history of mankind legally, and the guy breaks it and doesn't even win the race. Both runners were clad in Adidas's ultralight $700 Australian running shoes. I think the shoe weighs like 97 grams, something's crazy. And Saul pulled away in the final leg to achieve that 1 hour 59.30.
But it's not just the weight, right? It's basically a trampoline.
Yeah, it's the weight and the springiness, exactly. So this all started when Nike released Vaporfly in 2017, the first super shoe. Adidas share price went up 10% after the marathon, which is pretty, like both Adidas and Nike have been absolutely smashed. Nike especially smashed.
Nike's got big problems.
Yeah, real problems. Nike's, like, I'm not saying it's terminal, but it's got some real issues.
It's not terminal.
Yeah. Well, it's never going back to what it was, share price wise. But
oh, well, you say that, but like, go look at Intel's share price graph, okay? Intel was...
Nike's not making data. Nike's not making chips.
I know, because it's not going back today. But do you remember how unpopular Intel was 1 year ago? People said that business was dead. People said that business had lost the game to NVIDIA. Now it is significantly higher than its highs from 1999.
Yeah.
There are only two massive, almost vertical spikes.
It's also quite bubbly.
1999 and now.
It's become quite memey, Intel.
Yes.
So,
look at the graph. The graph will tell you exactly all you need to know about where we are in the cycle.
So Adidas share price up 10%. Shares are still 40% off its recent February peak and less than half their all-time high in 2021. And they're back to where they traded a decade ago. So Adidas had a tough run, albeit Nike is a lot worse. So Nike's 76% of its peak in 2021. Yeah. So this is a share. Remember, the market's probably doubled since then. So this is a catastrophic result. This is Atlassian style. And it's back to where it was in 2014. So absolutely, it's basically like almost... This is the same as what we're talking about Seek.com being back to 2014 level. So I
did have a look at Nike a little while ago, and what I saw is it had the double whammy of falling profits and compressed price to earnings ratios. Yeah. And so that is really why the share price has been
the reverse of alchemy. Yes. You don't want to say that. Well, but they kind of go together. Like you see a reversal of this overpriced PE bubble. And so not only do you have the profits fall, but investors also go, or speculators go, hold on, I'm seen growth drop to negative potentially. These should have a super low multiple. So that inevitably happens.
And this should be the moment for Nike and Adidas, because either you're an AI stock or you're not, okay? And so they're not.
Yeah.
But then there are some things, if you're not an AI...
They're not Halo though. They're not high. They're not heavy.
If you're not an AI stock, then everyone asks this question about your business. How is AI going to make things worse for you? And the thing, if you're a vertical retailer, which is Nike basically is now, like they do, all right, they've gone back to selling a lot through Foot Locker, but they sell a lot themselves and they own their brand, and like they do a lot of research on shoes, and so does Adidas. Like right now, the answer with those businesses is AI can't hurt us, and maybe it can help us a bit. And those businesses should be having their moment in the sun. And I tell you which businesses are having their moment in the sun from that. Koala, which is down a bit on its IPO, but it got the IPO away. And Skin Candy, which is Trent Peterson is chairing. And so that's going to get its IPO away at the top end of the range. All right, it brought down the valuation. But these, I think investors are looking at these businesses and they're saying, what can we buy? We can buy AI, well, but that's run. We can buy things that we used to hate that are very capital intensive, but they're shielding us from AI downside. And vertical retail is this category that is low capex and also shielded from AI downside. This should be their moment in the sun now, in my view.
Well, it's not just Nike. It's pretty much all the shoe businesses have had a tough time. So look, even the good ones. So look at On Running, which is we think is a great business. That's down not 50%, but close to 50%.
What about Deckers? They own, what the shoe brand they own?
So yeah, Deckers own Hoka.
Yeah.
That's down exactly 50% off its high. And the high was only reached.
What earnings multiple these things are trading on now?
It was that they all seem to peak about just in like December 2024. So call it 18 months ago. That's on a 14 multiple. So we're just seeing multiple compression everywhere.
I mean, that seems very cheap to me. I mean, unless they've totally, I mean, we obviously haven't looked at this in detail.
Yeah, and earnings are up 20%. Like they're not, why don't we do a deep dive in these, into a couple of these businesses?
This moment of how can I be shielded from AI downside?
Yeah.
The ways you can be shielded are buying stuff that has lots and lots of asset, like a very asset heavy business, but those businesses suck. Like we've always thought those businesses suck. Like you have to invest all this money into them and eke out a return from them. But there's this other category of business that is not capital intensive and shielded. I think that those should be doing really well in this market.
There's been some sort of shoe apocalypse in the last sort of 18 months because they're all, even like Nike's down up 76%, but even the good ones are down 50. Well, Nike's a great business, but I think the problem was investors are spending too much money paying for these, call it inverted commas, brand, and they're quite, and what On and Hoka have shown is it's quite commoditized, this space.
Maybe. But I mean, I don't know, we'll look into it in detail because it might also be that investors are spending all of their money on AI capex and gold and have no money left for anything else.
Shoes.